Hey, Anthony.
Hey.
We are continuing our series on Form 5471.
And that's why I'm still wearing my Form 5471 suit.
Yes.
Yes.
We've talked about the history, penalties, categories, schedules, but we ended our last video about schedules with a question. So what was the question and what did you find out for an answer?
Well, the question was this. If someone files a Form 5471, you're allowed to just say, hey, look, I don't need to prepare one. There's one filed. You put it on Part E of the 5471. It lists all the other people that would have a 5471 requirement. You would get that information, and then on your own return, you say, hey, look, I'm not going to file a 5471. One's already been filed. Here's all the information, and you can file it. Now, this is the issue is that, as we were going through the last one, I was thinking, well, you could have people who are different category filers on the same Form 5471, and because your different category creates different schedule obligations, you could have somebody who's filing a Form 5471 to say, hey, no one's already been filed. It's like, yeah, but that was for a Category 5 filer. And you're a Category 3. And so you're missing some things. Or you could be a Category 2 filer and the other person was a Category 3. So what do you do in that situation? And, we did ask our lead tax attorney for our tax department, Sean O'Connor, and usually he's pretty good with it. And he basically said the same thing that I suppose. He goes, he couldn't find anything specific on the instructions. And we go through these instructions. There's really nothing specific in there. But this is sort of one of our dogmas here. You never get punished for over-reporting.
Yes.
So what we would do in that case is we would fill out we'd get a copy of the old Form 5471 was, and then put in the schedules that weren't originally completed. And I think that's the safest way. Maybe there'll be some clarification, or maybe there's a tax pro out there who has seen such clarifications. If you do, please share that with us. We'd love to update it, and we'll give you full credit.
Yeah, we love to learn.
Yes.
But now we want to continue our series with dormant foreign corporations. We're going to go through the different reasons why your corporation would be considered dormant. But you had an example of this
right
here at the firm.
Yeah, and this is something that maybe most people in the U.S. wouldn't know, but in other countries, okay, if you have real estate, if you own a house, you don't own a house. The corporation you're a shareholder in owns the house. That's the way it's done. Now, one of the reasons why is that way you can avoid transfer taxes. If people did it in the United States, you could avoid. The state of Connecticut has a lovely transfer tax. When you sell your house, you have to pay now, I don't know, 4%. And you have the money. You're doing it when you're selling it. And if everyone just put their houses in an LLC, you would never sell your house. You'd sell the membership ownership in your LLC, so you could avoid a transfer tax because nothing really was transferred except an ownership that's not taxable. So I'm trying to start a... trying to start that. Yeah, it's like, guys, we could stop. Of course they would get, there's a pretty easy workaround there for them. But that is still how it's done in many Latin America. It's big. A lot of countries around the world, you don't own anything in your name. The other reason why you don't own anything in your name is you are a U.S. person and you must have a lot of money. And so you are a target for lawsuits. You don't want to have things in your name, assuming, and here's the other thing. In Mexico, you can't buy land. You're not a Mexican. Tough. Like wow.
Yeah.
Geez.
Huh.
Wait, so okay.
Right.
It just seems like a little uneven, sort of the rights of a Mexican coming here and then the rights of an American in Mexico. Okay, whatever.
Different video.
I'm not here for that, right? But those are some of the reasons, and litigation is one of them. And so now you can imagine if somebody's opened up foreign corporations for various things, how many foreign corporations can a U.S. person, someone, an expat overseas, have? And, they sort of, when you talk to someone like, oh, I only have about 4, and then 4 foreign corporations as you go, it's like, oh, you have a 40. Because there's one client we uncovered, because in other countries, there could be a national registry of all the corporations, because the corporation is actually coming from the country. Now, as opposed to the United States, hey, Claudine, get me a list of every corporation in the United States.
Okay.
Yeah, you wouldn't be able to.
Right.
Because every corporation is by state. So you have to go through every state's database, and some are harder to access than others, to get the complete list. So, and then to find the owners, you're talking a monstrous amount of work to find it. But when we go to National Registry, say in Costa Rica, and this is the example I have, we can really find who has what. And this is also something to think about if you haven't disclosed. Kind of easy to find where you might have a 5471 liability. Now, this is one case. This is, I think, my favorite example of a 5471. My client had a little bit of money. He wanted to buy a toy, so he bought a jet ski, and he bought that in 2003. He puts it into, it's owned by a controlled foreign corporation. So he had the jet ski for years and, beat the snot out of it, and then he eventually donated it. And so the question is, and I think we want to do this, if he's a dormant, if that CFC that owns the jet ski, if it's dormant, it can really file a much, much simplified 5471. So we want to run through the test of Revenue Procedure 9270 of the 8 conditions that allow you to say it's dormant. So what are those? Why don't you start?
So the first one is the foreign corporation conducted no business and owned no stock in any other corporation other than another dormant foreign corporation.
Well, the only business it conducted was fun, but I don't think that counts. So, right, we've met that.
Okay. No shares of the foreign corporation other than the director's qualifying shares were sold, exchanged, redeemed, or otherwise transferred, nor was the foreign corporation party to a reorganization.
Yeah, and I think this was a set it and forget it. So he met that one.
Yep. No assets of the foreign corporation were sold, exchanged, redeemed, or otherwise transferred, except for minimus transfers described in 4 and 5 below.
Okay, so I think there it is. He did donate it, I think, after it was at the end of its useful life.
Yep.
De minimis value, a 10-year-old jet ski that's going to need some work. I don't know, a couple $1,000 maybe it's worth.
Okay. The foreign corporation received or accrued no more than $5,000 of gross income or gross receipts.
Okay. Yep, that did not happen.
The foreign corporation paid or accrued no more than $5,000 of expenses.
Wow. Huh. That's actually, no, it didn't do that, but that actually could surprise, because you could certainly see a boat, needing that, or...
A boat.
Yeah, boats. Oh,
Let's make a note on that one.
Yeah.
Okay.
So, wow, you can incur or accrue no more than $5,000 expenses. Now, I think the issue is if you're paying it out of pocket and you're not running it through the corporation, you're talking small dollar figures. So you might be okay there.
Yep. The value of the foreign corporation's assets as determined pursuant to the U.S. generally accepted accounting principles, but not reduced by any mortgages or other liabilities, did not exceed $100,000.
He met that.
Yep. No distributions were made by the foreign corporation.
None.
And finally, the foreign corporation either had no current or accumulated earnings and profits, or had only de minimis changes in its beginning and ending accumulated earnings and profits balances by reason of income or expenses specified in 4 or 5 above.
There were no earnings.
What?
So we could have just stopped there.
Yeah.
Right? There were no earnings. Okay. So, yeah.
So you do have to meet all 8 of these.
Right.
Okay. To be
But
considered.
you still have to file a Form 5471.
You do.
Yeah.
It is much simpler. You complete only page 1 for each dormant foreign corporation. So if you have 40 of them, you're doing 40 Form 5471s. Oof. Okay, so this is what I think is funny.
Every year?
Every year. So listen to this. The IRS generally has really specific instructions on their forms. Like every little box has to be filled out properly, right?
Yeah.
I mean, they're so detail-oriented. Right. Pages and pages of instructions, okay? But if you're going to complete Form 5471 for a dormant corporation, in the top margin of the summary return, you just have to write filed pursuant to Proc 9270 for dormant foreign corporation. So you just sort of scribble that on the top.
Yeah, and we've done that. Right. That does.
Yeah,
that seems absurd. It's like you've created a checkbox for everything.
But in this case, just a little scribble to the side.
We don't. And it's like, you have box D, check if any accepted specified foreign assets are reported on this form. And you could have you could have put wasn't there a letter that was missing?
Yes.
Well, they could have put an F.
A D.
Is this a dormant, put an F check spot. Is this a dormant one?
Yeah.
Okay.
Done.
Instead of
writing out.
I mean, it looks a little like,
just weird.
When you're sending that to a client too, it's like, I guess this guy couldn't afford the good software. Right?
I'm supposed to write that.
Yeah.
There's no check.
Okay. All right.
You include filer information such as name and address, items A through C in tax year. You include corporate information such as the Dormant Corporation's annual accounting period. And then you're done. So just minutes worth of work.
For each one.
Yes.
Now you have multiple jet skis. Put them in one.
Yeah.
I guess well, no, but then make sure they don't go over $100,000.
Yep. What's a jet ski run you?
Well, if you want like a new Sea-Doo RXP X300, that's pretty good. It's like 16 for that one.
All right.
That's
So
pretty good.
You could have a few.
That's not a bad one,
Okay.
But the 260 is pretty nice. Only 40 less horsepower. But I can get the Stage 1 kit to get that up to 300 horsepower with a quicker impeller. So I think that's what I'm looking at this year.
Okay.
Just need a little more get up and go.
Yep.
Yeah.
All right. So does this conclude our Form 5471 series?
Well, I think we wanted to do one. I think we're going to do one more.
Okay.
Because I think what's really important is because of all these issues coming up, and that because a lot of people, they did file some Form 5471s. Now, as we've gone through this series, right, we have seen there's a little errors you can get wrong, even when you're doing it right, even when you're aware. So what I want to finish this off with is a Form 5471 OVDP. Or what to do when your Form 5471s aren't right. And I think that's the better one. Because OVDP might not be it. It might be just delinquent 5471. So I think that's what I want to conclude this one with.
Perfect. All right. You get the suit cleaned. You
All
guys
right.
subscribe to the channel so you find out when we do that video. It'll be later in the week. You can also subscribe to get awesome tax info at irsmedic.com. Thanks for watching. IRS Medic, the law offices of Parent LLP. Real tax attorneys for tough tax problems.